This secret was buried for decades, hidden behind closed doors in Shanghai boardrooms, and whispered about in the marble halls of London's financial district. But now, in 2026, it's erupting into the open, and it's costing everyday Americans and Brits billions. Imagine waking up to find that the world's richest billionaires' names you've never seen on Forbes, faces you'll never spot in the tabloids, have quietly triggered a gold rush so massive it's draining the vaults of New York, London, and Zurich. While you're checking your 401k or worrying about your pension, these shadowy elites are moving mountains of gold, betting on a future they believe is about to collapse. Why are Chinese billionaires suddenly hoarding gold at record levels? What do they know about the next financial crisis that Wall Street and the Bank of England are too afraid to say out loud? And how could this secretive gold grab trigger chaos for your savings, your home, and your future? The answers are more shocking and more urgent than you think. Because as the S&P 500 hits dizzying highs and UK mortgage arrears quietly surge past 84,000 cases, a silent financial war is raging beneath the surface. The rules are changing, the stakes are rising, and the next move could decide who gets rich and who gets left behind. Stay with me, because what you're about to discover will change the way you see your money, your future, and the global power game forever. In 2025, a number quietly appeared in the financial pages, a number so colossal, so unprecedented, that most people simply scrolled past it. But behind that number, a silent revolution was underway. Chinese billionaire wealth had exploded to $2.3 trillion. Let that sink in. A sum greater than the entire GDP of Australia, now concentrated in the hands of a few hundred individuals, most of whom you've never heard of, operating in the shadows of Beijing, Shanghai, and Hong Kong. But this isn't just about getting rich. It's about how these billionaires, in the midst of global uncertainty, managed to outpace every Western rival, even as Wall Street and the city of London teetered on the edge, while Americans watched their 401 kiloseconds bounce with every Fed announcement, and Brits worried as mortgage arrears soared past 84,000 cases. China's elite were quietly rewriting the rules of wealth. How did they do it? Not by following the crowd, but by moving in silence, divesting from volatile tech stocks, pulling out of risky real estate, and pouring billions into assets the West barely noticed: gold, rare earths, strategic stakes in US and UK companies. These were the new chess pieces in a game most people didn't even know was being played. Imagine the power that comes with $2.3 trillion. It's enough to buy every home in Manhattan, or to fund the NHS for years. But these billionaires weren't just hoarding cash, they were buying influence, security, and most importantly, insulation from the chaos they saw coming. As the New York Fed's debt ballooned to $18.59 trillion and the S&P 500's P/E ratio soared to 30, Chinese tycoons were quietly preparing for a world where the dollar and the pound might not be safe havens anymore. Some funneled money into London's luxury property market, driving prices so high that locals were locked out. Others snapped up American tech firms through shell companies, gaining silent control over the future of AI and energy. And all the while, Western investors were distracted by the next meme stock or crypto craze, never noticing the silent transfer of power. The question is, what do these billionaires know that you don't? Why are they betting so heavily on gold and hard assets, just as the West doubles down on risk? And if $2.3 trillion is now in the hands of China's richest, what does that mean for the future of your savings, your home, and your financial security? The answers are more urgent and more shocking than anyone in Washington or Westminster is willing to admit. And as this gold rush accelerates, the gap between the world's elite and everyone else is about to become a chasm. Are you ready for what comes next?
In 2025, while most of the world was distracted by headlines about tech layoffs, political scandals, and the relentless rise of the S&P 500, something extraordinary was happening behind the scenes. A movement so massive, so quietly orchestrated, that it sent shockwaves through the global financial system. Gold imports to China surged by a staggering 38% in a single year. That's not a typo. It's the largest jump in modern history, and it didn't happen by accident. Picture this. As Western investors obsessed over meme stocks and digital currencies, cargo planes and container ships were ferrying literal tons of gold into Chinese ports, day after day, night after night. Vaults in Shanghai and Beijing filled to bursting, while the Shanghai Gold Exchange reported record-breaking volumes that left even seasoned traders speechless. But why? What did China's elite see coming that the rest of the world missed? The answer is as chilling as it is revealing. For decades, gold has been the ultimate safe haven, the one asset that governments, central banks, and billionaires turn to when they sense a storm on the horizon. And in 2025, the storm clouds were gathering fast. The New York Fed's debt had soared to $18.59 trillion. The pound was wobbling under the weight of UK mortgage arrears, and inflation was quietly eating away at the value of every dollar and pound in your pocket. But while Western central banks issued calm reassurances, China's billionaires and state-backed funds were taking no chances. They were buying gold at a pace not seen since the 2008 financial crisis, locking in their wealth and hedging against a future where fiat currencies might not be worth the paper they're printed on. And here's where it gets personal. Every ounce of gold shipped to China is an ounce that's not available to Western investors, pension funds, or central banks. As China's vaults filled, whispers began to circulate in London and New York. What happens if there's a global gold shortage? What if the next crisis isn't about stocks or bonds, but about who controls the world's last reserves of real, tangible wealth? Some analysts warned that if the trend continued, the West could find itself dangerously exposed, forced to buy back gold at sky-high prices, or risk watching their currency spiral. Meanwhile, everyday savers in the US and UK, focused on their 401ks and ISAs, remained blissfully unaware that the rules of the game were changing beneath their feet. The question is, if China's billionaires and policymakers are betting everything on gold, what do they know that you don't? And how long before the rest of the world wakes up to a new financial reality, one where the gold rush isn't just history, but the future? In 2025, a number flashed across the screens of Wall Street and the world, a number so colossal, so unfathomable, that it seemed almost fictional. $18.59 trillion. That's the latest figure for the New York Federal Reserve's debt, a sum so vast it's hard to even picture. Stack $1 trillion in $100 bills and you'd reach the edge of space. Multiply that by nearly 19 and you begin to grasp the scale of what's at stake. But this isn't just a statistic for economists to debate in ivory towers. This is the silent force shaping the fate of every American saver, every British pensioner, and every investor who still believes the dollar is untouchable. Because when the world's most powerful central bank racks up debt at this pace, the ripple effects are felt in every corner of the globe. But here's the part that should make you sit up. While politicians in Washington argue over budgets and spending, the world's sharpest billionaires, especially those in China, are watching with cold calculation. They see the writing on the wall. Every new trillion added to the Fed's balance sheet is a signal. The dollar's supremacy is no longer guaranteed. Inflation, once dismissed as transitory, is now a daily reality, quietly eroding the value of your paycheck, your savings, your retirement fund. And as the U.S. government borrows more to keep the system afloat, confidence in the dollar begins to crack, not just in Beijing or Moscow, but in London, Frankfurt, and even on Main Street, USA. The consequences are already unfolding. As the Fed's debt ballooned, gold imports to China surged 38%, and the world's savviest investors started moving their chips off the table. Warren Buffett, the Oracle of Omaha himself, is sitting on a record $381.7 billion in cash, refusing to play the game as usual. In the UK, the Bank of England is quietly warning about shadow banking risks, and mortgage arrears have soared to levels not seen since the last financial crisis. Meanwhile, everyday people are left wondering why their money doesn't go as far as it used to, why their 401k or pension seems stuck in quicksand, and why the cost of everything, from groceries to gas to housing, keeps climbing. But the real danger is what comes next. If the world loses faith in the dollar, if the Fed's debt becomes too big to ignore, the shockwaves could be catastrophic. Imagine waking up to find your savings slashed in half overnight, your investments wiped out, your financial future suddenly uncertain. It's happened before, in Argentina, in Greece, in countless countries that thought it could never happen here. The question is, are you prepared for the possibility that the world's reserve currency could be the next domino to fall? And if the richest, most connected players are already hedging their bets, what should you be doing right now to protect yourself? The clock is ticking, and the next chapter in this story could be written sooner than anyone expects. In a world obsessed with risk, where every TikTok finance guru screams buy the dip, and Wall Street analysts cheer the S&P 500's relentless climb, one man is quietly refusing to play along. Warren Buffett, the Oracle of Omaha, the most legendary investor of our time, has parked a jaw-dropping $381.7 billion in cash inside Berkshire Hathaway. Let that number sink in. That's more than the GDP of entire countries, more than the combined annual budgets of the NHS and NASA, just sitting there, untouched, while the rest of the world scrambles for the next big thing. But why? Why is the man who famously said, "Be greedy when others are fearful," now acting more cautious than ever before? What does Buffett see that the rest of us are missing? This isn't just a quirky move from an aging billionaire. It's a blaring siren for anyone paying attention. Buffett's cash mountain isn't about indecision. It's about preparation. He's watched the New York Fed's debt rocket to $18.59 trillion, seen the S&P 500's P/E ratio soar to 30, and witnessed the wild swings of meme stocks and cryptomanias. He knows that when markets are this frothy, when everyone is convinced the good times will never end, that's when the real danger lurks. And so, while others chase risk, Buffett is quietly building a war chest, waiting for the moment when panic returns and assets go on sale. It's a strategy that made him billions during the 2008 crash, and it's one he's doubling down on now. But here's where it gets even more intriguing and a little unsettling. Some insiders whisper that Buffett isn't just waiting for a stock market crash. They speculate he's eyeing gold, just like the Chinese billionaires who've triggered a 38% surge in gold imports this year. Remember, Buffett shocked the world in 2020 by buying into Barrick Gold, a move he once swore he'd never make. Is he preparing for a world where cash is king only until the dollar's crown slips? Where hard assets, not digital promises, are the true safe haven? The clues are there, if you know where to look. And the ripple effects stretch far beyond Omaha. In the UK, pension funds are on edge, with the Bank of England warning about shadow banking risks and mortgage arrears climbing to crisis levels. Everyday savers in the US and UK are left wondering, if the world's most trusted investor is hoarding cash, should I be worried about my 401k or ISA? Should I be rethinking everything I thought I knew about safe investments? Because when Buffett makes a move or refuses to make a move, the world takes notice. The question is, will you act before the next storm hits, or will you be left scrambling when the music stops? The answer could define your financial future. In 2025, a quiet crisis began to unfold across the United Kingdom, one that barely made the front pages, yet threatened the very foundation of the British dream. Mortgage arrears, the financial red flag that signals families are falling behind on their home payments, surged to a staggering 84,100 cases. That's not just a statistic. It's tens of thousands of households, from the bustling streets of London to the quiet suburbs of Manchester, suddenly teetering on the edge of disaster. Imagine the anxiety. Parents lying awake at night wondering if the next letter through the door will be a final warning, or if the home they've worked their whole lives for could slip away. For many, this isn't just about money. It's about security, dignity, and the fear of losing everything in a world that feels increasingly unstable. But how did it come to this? The warning signs were there, hidden in plain sight. As interest rates crept higher and inflation quietly devoured paychecks, more and more families found themselves squeezed between rising bills and stagnant wages. The Bank of England, in a rare moment of candor, warned that the shadow banking sector, those unregulated lenders lurking outside the traditional system, was amplifying the risk. Suddenly, people who thought they were safe discovered their mortgages had been sold, repackaged, and passed around like hot potatoes, leaving them exposed to the whims of distant investors. And as the cost of living crisis deepened, the safety nets that once protected British homeowners began to fray. The ripple effects are impossible to ignore. Every missed payment doesn't just threaten a single family, it sends shockwaves through the entire economy. Local businesses suffer as spending dries up. Property values wobble, eroding the wealth of entire communities. Pension funds, many of which are heavily invested in mortgage-backed securities, start to feel the strain, putting the retirement dreams of millions at risk. And all the while, the headlines remain fixated on stock market highs and political drama, barely acknowledging the slow-motion disaster unfolding in neighborhoods across the country. But here's the most chilling part. This surge in arrears isn't just a British problem, it's a warning to the world. In the U.S., rising debt and stagnant wages echo the same dangerous pattern. In China, billionaires are hoarding gold, sensing that the global financial system is more fragile than ever. The question is, if 84,100 British families can be pushed to the brink so quickly, how safe is anyone, anywhere? And as the gap between the wealthy elite and everyday people widens, what will it take for the world to finally pay attention? The next chapter in this crisis is being written right now, and your home, your savings, and your future could be on the line. In 2025, a single number began flashing like a warning beacon across the screens of every serious investor. The S&P 500's price-to-earnings ratio had soared to 30. For most people, that figure might sound like just another bit of financial jargon, but for those who know the history of markets, it's a blaring siren. A P/E ratio of 30 means that investors are paying $30 for every dollar of company earnings, a level not seen since the feverish days of the dot-com bubble, right before it all came crashing down. But this time, the stakes are even higher. The world is awash in cheap money. Central banks are still printing, and the average American or Brit is being told that stocks are the only way to keep up with inflation. But what if that advice is a trap? What if the real insiders, the billionaires, the hedge funds, the shadowy sovereign wealth managers are quietly preparing for a reckoning while the rest of us are being herded toward the edge of a cliff? Let's put this in perspective. The last time the S&P 500's P/E ratio hit these heights, fortunes were made and lost overnight. Back then, it was tech startups with no profits and wild promises. Today, it's everything. Tech, energy, consumer goods, even utilities, pumped up by years of easy money and a desperate search for yield. Pension funds, 401ks, and ISAs are all riding this wave, and the media keeps cheering it on. But beneath the surface, the smart money is getting nervous. Warren Buffett, the Oracle of Omaha, is sitting on a record $381.7 billion in cash, refusing to buy at these prices. Chinese billionaires are pulling their wealth out of stocks and pouring it into gold, real estate, and hard assets. Even the Bank of England is warning about the risks of shadow banking and asset bubbles. So why is everyone else still piling in? The answer is as old as finance: FOMO, fear of missing out. No one wants to be the one who missed the rally, who sat on the sidelines while their neighbor got rich. But history is clear. When valuations get this stretched, the fall can be sudden and brutal. In the UK, mortgage arrears are quietly climbing, and pension funds are more exposed to risky assets than ever before. In the U.S., the New York Fed's debt has ballooned to $18.59 trillion, and inflation is eating away at real returns. Yet the average saver is told to just keep buying. But what if the rules have changed? What if the next crash isn't just a correction, but a seismic shift in how wealth is built and lost? Here's the question you need to ask yourself. If the world's smartest investors are stepping back, if the P/E ratio is screaming danger, and if the richest are quietly moving their fortunes into safer havens, what should you be doing right now? Because when the music stops, it won't be the billionaires left without a chair. It'll be the everyday savers, the pensioners, the families who trusted the system. The S&P 500 at a P/E of 30 isn't just a number, it's a warning. Are you listening? So here's the brutal truth staring us in the face. Chinese billionaires are hoarding gold like it's the last lifeboat on a sinking ship, while your 401k, your pension, your future quietly drowns. The elite aren't waiting for 2026. They're building empires on the crash. Your move. Gold or cash? Drop it in the comments right now. Smash subscribe plus bell because tomorrow's video exposes 2026 crash, the exact date it hits. This channel is your weapon. Join the fight or get left behind.